Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas.
Today we have an update on Puravankara Ltd. Our analyst retains positive view on Puravankara and expect a 20% upside, assigning a higher NAV premium considering its strong growth potential aided by regional diversification. The company reported over 50% year-on-year jump in pre-sales and collection for Q3. It reduced its gross and net debt by Rs 53 crore and Rs 251 crore quarter-on-quarter. Consolidated revenues, operating profit margins, and net earnings beat estimates led by higher handover of units. It expects 1500 units to be handed in Q4 to achieve its second half target, driving earnings performance. Its launch pipeline of 13 MSF with 9 MSF to be opened for sale over the next 2 quarters would help maintain sales momentum. Strong surplus cash flow visibility of Rs 6,747 crore over 3 to 4 years provides comfort. Next, we have an update on Coforge Ltd. Our analyst maintains buy on Coforge stack with price target of Rs 7,670, owing to the consistently robust order intake, strong 12-month executable order book, and strong execution capabilities. Order book executable over the next 12 months stood at $974 million, up 4.2% quarter-on-quarter and up 15.8% year-on-year. Coforge has reaffirmed its FY24 annual growth guidance of 13 to 16% in constant currency terms and stated that revenue growth would be closer to the lower end of the band. Margins for FY25 are expected to be higher due to an increase in offshore revenue, SG&A, and favorable average resource cost. The organic YTD currency constant revenue growth stood at 14.7%. The company is thus on track to meet its annual revenue guidance commitment in a tough year due to its ability to execute against plan. We expect sales CAGR of 16.5% and PAT CAGR of 31.6% over FY24 to FY26. At the current market price, the stock trades at 29.5 times its FY25 and 24.2 times its FY26 estimated EPS.
Next, we have an update on Axis Bank. Our analyst maintains buy rating on Axis Bank with a price target of Rs 1350. Axis Bank reported inline performance in Q3, led by healthy loan growth, which was up by 22% year-on-year and 4% quarter-on-quarter, and low credit cost, maintaining strong asset quality with an ROA of 1.8%. Outlook on NIMs remains negative. Higher cost ratios along with moderation in loan growth as deposit growth remains challenging is likely to put pressure on the operating profit growth in the near term. However, strong asset quality and in-term lower credit cost would support the earnings trajectory and return ratios. Nevertheless, the investment thesis remains strong for Axis Bank, led by sustained improvement in the business franchise as the balance sheet mix has significantly improved for the bank in the last few years, which we believe is positive for its profitability and sustainable growth going forward. The stock has outperformed the broader indices in last 1 year and it currently trades at 1.8 times FY25 and 1.5 times FY26 core book value estimates.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.